Hey everyone, welcome back. We're going deep today into the world of work management software. Specifically, we're looking at Asana and how they're doing, how they're actually performing. We've got their Q3 2024 Form 10Q filing right here, and we'll be breaking down what it all means for the company's future. But before we get into the numbers,
Yes.
maybe you could give us a little background. What exactly is a 10Q, and why should we even care?
Yeah. The 10Q. It's basically a company's report card for investors and anyone who's interested. It shows their financial performance every quarter,
Yeah.
like their revenue, expenses, profits, or losses in this case, as we'll get to. Plus, it highlights any risks they're facing. So for Asana, this 10Q gives us a peek behind the curtain. It reveals their strategy, their challenges, their big bets for the future.
Gotcha. So it's more than just a bunch of boring numbers. So what's the big takeaway here? What jumped out at you when you first looked at this thing?
Well, the first thing I noticed was the revenue growth. They pulled in $183.9 million this quarter. That's a 10% jump compared to the same time last year, which is pretty impressive in such a competitive market.
10% growth? Not bad. But you mentioned losses earlier, so I'm guessing that revenue growth came at a cost.
Yeah, unfortunately, they reported a net loss of $57.3 million this quarter.
So they're growing but not profitable yet. Is Asana just spending a ton of money to fuel that growth? Is that sustainable in the long run?
That's the AE question, isn't it? And to be fair to Asana, their 10Q actually talks about this. They say they're intentionally prioritizing growth over profitability for now. They're putting a lot of money into research and development, particularly in AI, and they're aggressively expanding into international markets.
Okay, so it's a calculated risk. They're hoping those investments will pay off down the line. But aside from revenue growth, how can we tell if it's actually working? What other clues are hidden in this 10Q?
Well, one important metric is dollar-based net retention rate. It basically tells you how much existing customers are spending this year compared to last year. For Asana, it's currently sitting at 96% overall.
So existing customers are spending a little less. Not exactly a great sign. Does that mean they're losing customers?
Not necessarily. You got to look closer at those numbers. While the overall retention rate is slightly below 100%, their retention rate for core customers, probably their bigger clients, is actually over 100%. This suggests they might be focusing on attracting and keeping those larger, higher value customers, even if it means losing some smaller ones along the way.
Interesting. Sounds like they're aiming for the big leagues. But that takes some serious investment, right? Is there anything in the 10Q that shows how they're backing up that ambition?
Absolutely. Take their R&D spending, for example. They spent a whopping $83.3 million this quarter alone on R&D. That shows they're serious about innovation. They're building out their platform to appeal to those larger organizations.
Wow, that's a lot of money. And what about that stock repurchase program? Didn't they set aside $150 million for that?
Yeah, they did. Stock repurchases can be a way for companies to boost shareholder value. By buying back their own shares, they reduce the number of outstanding shares. This can increase earnings per share and maybe even drive up the stock price.
So they're basically saying, we think our stock is a good investment.
Exactly. It can also mean they think their stock is currently undervalued.
Okay, so we've got revenue growth, a focus on the bigger clients, major R&D spending, and a stock buyback program. They're not playing it safe, but it seems very U.S. focused, right? Is that the whole picture?
That's a good point. Actually, one of the most interesting things I saw in this 10Q is that over 40% of Asana's revenue now comes from outside the U.S. That's a significant chunk and shows they're making progress with their international expansion.
Wow, that's a lot of global exposure. But expansion comes with its own set of challenges, right? Currency fluctuations, different cultures, maybe even political instability in some regions. Seems like a lot to handle.
You're right. International expansion definitely brings both opportunities and risks. And those risks are something we should take a closer look at.
For sure. We've got the revenue side of things. But what about the challenges Asana is facing? What kind of risks are they talking about in this 10Q? And how do they plan to deal with them? I guess we'll find out in part two. So Asana's pushing for growth, investing a lot in R&D and international expansion, but like you said, there are going to be some bumps along the way, right? What kinds of risks are they actually flagging in this 10Q?
Yeah, well, one that really stands out these days is cybersecurity. I mean, think about it. Asana holds a ton of sensitive data for all these companies, making them a big target for hackers.
It's true. We hear about those data breaches and ransomware attacks all the time. So what would that even look like for Asana? Like, what would happen? And are they even ready for something like that?
Oh, it could be huge. You could have disrupted service, their reputation could be damaged, legal battles. I mean, it would really shake things up. Now, the 10Q doesn't get into specifics about their security measures, which makes sense. You don't want to show your hand, right? But they do emphasize that they're constantly investing in security upgrades.
So at least they know it's a threat, and they're taking it seriously. But as you said, nothing's foolproof. What other risks are they worried about?
Competition is a big one. The market for this kind of work management software is getting more and more crowded. You've got all these established players, plus all these new startups, all fighting for the same customers. Asana has to keep innovating and making themselves stand out to stay ahead.
Yeah, it's a constant race, right? To offer something different, something better than the competition. What about their reliance on other platforms? Like, what about Apple and Google and their app stores? That seems risky, right?
Oh, absolutely. They really depend on those platforms to reach people, and that's a vulnerability. If Apple or Google change their rules suddenly, like increasing their fees or limiting features, it would hit Asana's reach and profits hard.
Yeah. It's like building your house on someone else's land.
Yeah.
You're always at the mercy of the landlord.
Exactly. Exactly. It shows how important it is to have different options, not just relying on one platform.
Okay, so we've got their financials, their growth strategy, and the potential problems. But there's one more thing that I find really interesting. It's their dual-class stock structure.
Ah, yeah, that's definitely something unique about how they're run,
Mm-hmm.
worth talking about. Basically, it means that the founders still have most of the voting power, even if they don't own most of the shares.
So they have more say than a regular shareholder. Seems like that could be good or bad, depending on how you look at it.
Right, it's a trade-off.
Yeah.
The main argument for it is stability. It lets the founders focus on the long term. They don't get pushed around by short-term market pressures or investors who just want quick profits.
So it's like they can steer the ship without checking in with the passengers all the time.
Exactly. They have the power to make big decisions, even if they're unpopular at first, as long as it helps the company in the long run.
But it also seems like it would make them less accountable, right? If the founders have all the control, what happens if things go wrong?
Yeah, that's the downside, for sure.
Hmm.
It definitely raises concerns about transparency and potential conflicts of interest. And for Asana, this structure probably makes them even more likely to stick with that growth over profit strategy, even if some investors aren't happy about it.
It's definitely an interesting situation. Adds another layer of complexity. So we've got impressive growth, but they're not making money. They're making big investments, but they're also big risks. And their stock structure is pretty unusual.
Yeah, this 10Q has been really eye-opening, that's for sure.
Mm-hmm.
Lots to think about, goes way beyond the surface level.
It's amazing how much you can learn from these things, even though they're not exactly fun to read. But what does it all mean for Asana's future? And for anyone who might want to invest in them? I guess that's a question for part 3. Okay, so we've seen the good, the bad, and the interesting when it comes to Asana, right?
Yeah, definitely a mixed bag. They're going all in on growth and innovation, but they're also taking on a lot of risk.
It's like walking a tightrope, isn't it?
Exactly. High reward, but high risk too.
So after looking at all this, what does it tell us about where Asana is headed?
Well, it shows they're committed to growing, even if it means losing money in the short term. They're putting a lot of resources into things like AI and expanding globally. And their stock structure gives the founders a lot of freedom to do that.
But we also saw from potential problems like competition and security risks.
Oh, absolutely. And we can't forget about the whole economic situation, right?
Right.
That could definitely impact their international revenue.
So the question everyone's asking is Asana a good investment?
That's a tough one. I think we've given you the information you need to decide for yourself.
Yeah, there's no easy answer. But I think we've given our listeners a lot to consider. Do Asana's plans and their focus on innovation outweigh the risks?
Right, and remember, this was just a starting point. There's always more to learn. Don't just take our word for it. Go read the 10Q yourself. Look into their competitors. Think about your own investment goals.
It's about making informed decisions, not following the crowd. Who knows? Maybe you'll find something we missed. That's all the time we have for today, but until next time, keep exploring, keep learning, and keep asking the tough questions.